Midweek market update. Now today we're going to look at some AUD pairs. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like for me to cover in my next video. So on Wednesdays, I normally come through and bring you guys some new market breakdowns in 4 pairs that you can be looking out this week. So the most interesting pair that you can be looking at taking advantage of is the Canadian dollar. And the reason for that is we saw the Bank of Canada came out today and they hiked interest rates by 0.25 basis points. So we can definitely expect the cat in general to increase in strength, and so we can expect most pairs trading against the cat to weaken in value. So we're going to start with the situation that we got here on AUD cat. Now if you start here on the monthly time frame, firstly, what do we see? Now we can see over here how the market had broken below this very strong level of support got broken, the market came to test it multiple times as resistance. Now we can see how the market is once again back at this level, while on its way to that level, but we can expect the market to pull back and continue to the downside there as well. Now from a weekly perspective, what do we see? Now on the weekly time frame, we can clearly see how the market is currently testing a strong level of resistance, and the market also gave us this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high. And we can see we got the 0.50% lining up perfectly with the structure that the market created in the past, acting as a level of support, got broken, became resistance, resistance got broken, all of that resistance became support, support didn't hold, broke below that, came to retest it, all of that support got turned resistance and the market broke above that level. So we can definitely expect the pullback to the downside before the continuation to the upside there as well. So we are going to use this as our take profit level. Now from a daily perspective, what do we have? Now here on the daily time frame, what do we see? Now from a daily perspective, we can firstly see how the market printed this structural area over here. Now this acted here as a level of resistance, the market broke above that, came to test it as support. Now as traders, we have to look for the best probability to get into the market. I have to be reactive and not predictive. Now, the best way to approach the current situation that we got here on AUD is to wait for a clear break below this level, and then on the retest, we're going to start looking for selling opportunities for the market to go and test that 0.50% as identified from a weekly perspective. In doing so, the market will also print this head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Next up, we're going to look at the Eurocat. Now, the Eurocat is quite bearish as it stands now. So, if we start here on the monthly time frame, what do we have? Firstly, we can see how the market had broken below this very strong level of support. Support got broken and then became resistance. The market also gave us this massive impulse. We got the correction, and if we want to measure that take profit level, you take your Fibonacci from the low to the high. We can see how that we had a 50% pullback to that level of support and resistance. Now if we readjust our Fibonacci, we can see how the first take profit had hit in the market there already. The market is also currently testing very strong level of support. Now from here, we could potentially see the market pull slightly back before we can expect a continuation to the downside. So here on the weekly time frame, what do we have? Now from a weekly perspective, I think it's very clear. Now the loss structure that the market had created is sitting at this level. Now we can also see this level here acted as level of support. Support got broken and it's now turned the resistance. So going forward, we can definitely expect the Eurocat to pull back before the continuation to the downside. Also, we can see how the market had opened with this massive gap over here. Now, if you look at the daily candle that we're at over there, that was the last structure that the market created. We had that impulse. If you take your Fibonacci there from the high to the low of the impulse, what we see over here is that we have a 50% pullback that is almost aligned with the previous level of support that is now turned resistance. So moving forward, we can definitely expect the Eurocat to slightly increase in value before the continuation to the downside. Because one thing we need to keep in mind is that fundamental data drives the long-term momentum of the market, and technical analysis drives the short-term momentum of the market. Next up, we got the CAT JPY. Now, starting on the monthly time frame, what do we have? firstly, we can see how the market had printed this strong level of resistance, and we can definitely go and expect the market to go and hit that level once again. So we are going to use these highs as our take profit level, as we're expecting the CAD to increase in strength over time. From a weekly perspective, what do we see? Now, from the weekly time frame, we can see how the market printed this W formation. Now, after a W formation, you expect to pull back to the neckline before the continuation. The market had also given us this this massive impulse. Now, after an impulse, you expect a correction, and that is exactly what the market has given us. So, if you take our Fibonacci there from the low to the high, we can see how the market first tested the 61.8 and then the 38.2. Now, if we readjust our fibs to take it on the correction, we can see how we got a perfect minus 27, lining up perfectly with that previous level of resistance that we can expect the market to go and test. Now, from a daily perspective, what do we see? Now, here on the daily time frame, the price action is quite interesting. Firstly, if you look left here, you can see how this level over here acted as a strong level of resistance. Now, what we are going to wait for is we're going to wait for the market to pull back slightly higher, come back, and then on the retest, we're going to start looking for buying opportunities. Now, the best way to measure how far an impulse will go is quite simple. First, you want to do is take your Fibonacci from the low. Make sure you got the 0.382 lining up perfectly with that structure. And if you look over there, you can see how the previous level of resistance turned support lining up with the 0.382. It's giving us an indication that we're going to expect the market to go and hit that previous level of resistance, get a pullback before the continuation to the downside there as well. Now, ladies and gentlemen, next in line, what do we have? Now, next up we have CAD CHF. Now, the CAD CHF, the Swiss franc is considered a safe haven pattern as well, for those of you that do not know. But the Swiss franc also here, from a monthly perspective, has got this possibility of completing the same formation. Now, if we talk about the market structure that we have over here, we can firstly see how the market had printed this inverted head and shoulders. The market had also given us this impulse correction, and we can definitely expect the continuation to the downside. Taking our Fibonacci from the low to the high, you can see how the market tested and rejected the 61.8, aka the golden ratio. Now, if we readjust the fib slightly, we can see how we get a minus 27, which is a take profit level, lining up perfectly with that previous level of resistance. We can also see how the market has the potential of printing this W formation, which is also considered a bullish pattern from a technical perspective. So we are going to use that as our take profit level from a monthly perspective. Now, on the weekly time frame, what do we see? Now, on the weekly time frame, firstly, we can see how the market had been stuck within this consolidation phase. With the fundamental data being released this week, we obviously saw that investors now understand which direction it is that they want the market to go as well. Now, if you look slightly left over here, you can see how the market had been rejecting this very strong level of support over here. Acted as resistance, market broke above that. We had multiple weak rejections. We had some liquidity grabs there as well. I can see how the market is finally starting to move to the upside there as well. If you drop down on the daily time frame, what do we see? Now, firstly, the market is about to approach a strong level of resistance. So, as traders, we have to be reactive and not predictive, and learn to adapt to the ever-changing market environment. So we're going to use the same trick that we just did with the other pair. We're going to take our Fibonacci from the low to the high, and what we want to see is a 0.382 pullback that's lining up perfectly with our previous level of support that is now turned resistance. So the way that we are going to approach the situation moving forward is we're going to wait for the market to break above that level, come back for the retest, and then start looking for buying opportunities for the market to complete this impulse correction and impulse that we have in the market over here, and also for the market to go and break that level of resistance that would then return support as well. We also have the fundamental data to back up the theory that we are looking to see the CAD increase in value over time. Now, next up we got the NZD CAD. Now, the funny situation about the NZD CAD is the Bank of New Zealand also came out, I think it was about last month, they came out and they hiked the interest rates. Now you can see the NZD obviously enjoyed that move to the upside there against the CAD, but it's unfortunate that they are being stopped now, you know, to say that, hey, it's time to go down. it's time to go down once again. Firstly, what do we have over here? We have the market printed at level of support. Support got broken. Market can be tested as resistance. Apart from that, the market also printed this overextended information. Often overextended information, We expect a pullback to the left leg before the continuation, and that's exactly what the market has given us. Furthermore, we have this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low, from the high to the low. We can see over here how we have a 0.50 that's lining up perfect with that structure. So we can definitely expect a continuation in the market to go and test that previous level of resistance, that previous level of support as identified from a monthly perspective. Here on the weekly time frame, what do we see? Now, from a weekly perspective, I think the price action is quite clear. So, firstly, we had this level of support that got broken. The market then came back for the retest and is now testing all of that support as resistance. So, if you take a Fibonacci there from the high, sorry about that. If you take a Fibonacci there from the high to the low of that massive impulse, you can see how the market tested and rejected the 61.8, which is known as the golden ratio, giving us a further confirmation that the move to the downside is definitely expected. And from a daily perspective, what do we see? Now we can see on the daily time frame, this market was stuck in a consolidation phase from the 23rd of February. Unfortunately, it's time for NZD to give up its gains and surrender itself to the cat. So the way in which we are going to approach the situation is, we know within a consolidation market this is acting as a level of support. Because we expect the market to continue to the downside, what we are going to do is we're going to wait for the market to firstly break below this level. Then on the retest, we're going to look for some selling opportunities for the market to go and complete this information, which is considered a bearish pattern from a technical perspective. Now that is it for this week's midweek update. I want to say thank you so much for your time.